John, I want to go to you to correlations within EM. I've been watching dollar yen, which didn't go weak, and then it did with a 110 print for a JPMorgan cup of coffee this morning. Are things correlating up, or all these EM disturbances discrete? To put some drama into it, John Normand, are we on the edge of an Ecuadorian moment?
I don't think we are. I'm not sure I know what that means, but I don't think we are. I think you're seeing a confluence of some systemic issues, which is the recorrelation of the dollar with interest rates, and that's overlapping with a number of idiosyncratic issues in the big emerging markets. So that's a pretty negative cocktail. That said, I do think U.S. two-year rates are starting to crest because a lot of Fed tightening is priced for the next 12 months. If that happens, I think the dollar stabilizes and starts to come off versus the number of emerging market currencies that have cheapened. That doesn't resolve a lot of the idiosyncratic issues, but it at least removes the systemic influence on those currencies that's been pushing them down over the past few weeks. What
does the Fed do to adapt and adjust to this? I just can't believe they're not aware of IMF bailouts of Argentina or 3 standard deviation moves of Turkish lira. The Fed has to be aware of that, aren't they?
They are, but they also have to be true to the data. And there's really nothing in any of the U.S. economic data, not much in U.S. financial markets, that would tell you that there's a lot of stress in EM right now. If EM currencies were 10% lower, I think you would start to see investors rethink their view on U.S. profits. That would have an impact on the U.S. stock market, and you would also start to see an impact in some of the U.S. Industrial data and manufacturing data, but that's a long way off. So, you know, for the moment, or let's say that moment is several months, I think you actually could have more EM stress without the Fed changing the course of policy. It's not really showing up in the data for right now.